Hi everyone. Our next video now we will be looking at identifying key supply and demand or support and resistance levels on charts. Okay, so the reason why this is used is obviously to get a visual representation of where price action is performing. Is price action accurately holding certain levels? And is there a bias that it is clear and relevant within the chart or contract or asset that you are currently looking at. Okay, so on EURUSD, using the example again, when we look at obviously multiple time frames, we can see that just even taking EURUSD in the nearer term. Okay, so we're obviously going to go to a full chart. We can see that price action, if we are to exclude price action after kind of the 15th, 16th of December, we look at price action here, okay? And largely you can say on the daily time frame, we can see that price action is kind of holding below kind of 122 and kind of above 121. Okay, now what we are noticing here kind of below 121 was two very short spikes. Okay, so what we can do is we can move this line ever so slightly down, okay, because that gives us a representation of the kind of the supply and demand or the support and resistance levels. All right, again we can see EURUSD. If we scroll back a little bit further, we can see that between the periods of September and November, so between the 15th or 16th of September and the latter part of November, 25th, 26th of November, price action again has been pretty consolidated and pretty range bound. Okay, so what does that mean? So it means price action is holding this level here, kind of as a resistance level at 119, and it was holding this level here just above 116 as support. Okay, so that's kind of where we were standing at that time. So other than that, price action was moving kind of laterally, sideways. It was kind of moving up, down, until we saw kind of towards the end of November, price action was continuing to grind within a range just below this resistance level before we obviously broke out. And we broke out. Okay, so that obviously is an indicative an example of support and resistance. So we could see that price action was clearly, as we said, it was rejecting this resistance level. Okay, so we've got 1, 2, 3 daily wick rejections. We've got another wick rejection here. We have got a wick rejection here and a false move upside. So we initially broke out, but we closed back into the range. And we've also got multiple daily wick rejections here before price obviously broke out. So that's obviously, I think when you look at any chart, any time frame, that's the one thing to kind of visualize yourself with. So whether you're looking on 4-hour, daily, weekly time frames, or you're obviously looking on the much shorter time frames, I think it's important to identify areas where price action has rejected. So i.e. examples here where price action has tested and come away from, or price action has bounced off. Okay, so where price action has come down here and bounced off this level. Okay, so in doing so, that'll kind of give you a more in-depth representation of price action within the structure of the charts that you're looking at. Okay, because obviously it'll be one of your confluencing factors when potentially taking a trade. Okay, again, if we are to factor onto the weekly time frames, we can see obviously price action on the weekly time frames. If we are to just kind of focus on that area again between 116 and 119, the weekly time frames again illustrating wick rejection on the weekly. We're kind of back and forth in this range between 116 and 119 before price action obviously broke through kind of the 119 120 level, and then obviously continued on that to 250 point continuation to the upside. Okay, so effectively when you're plotting, some of you will probably say, well, how do I identify support and resistance areas? Well, that's effectively that. It's what we're kind of explaining here now at the moment, that you can identify support and resistance areas by noting areas of where price action has come off a respective level. Okay, so obviously here at 116 is a key indicative area where price has obviously come back down to test and is obviously bounced off. Again, if we dial closer onto kind of present day, we can obviously see it here again at 122. Okay, so we can see 122 price action is rejected, it's rejected all across here before kind of breaking out to the upside. So obviously we've had volatile news the last week or so, last probably even 2 weeks of different fundamental factors. So obviously you've got Brexit, you've got surging cases in Europe and the UK in terms of coronavirus. So we've got COVID, the COVID obviously in the US, vaccine news. We have also stimulus packages. So we've got numerous fundamental factors which is causing very, very sharp movements in the latter week or so. So that's why it's important to be fully aware, be fully conscious of this, as levels can, and as we've seen through this chart, can very easily be broken, whether it be support or resistance. Okay. So that's effectively kind of what we're saying here with support and resistance. It's identifying areas, as we said, where price action has rejected or bounced off of, and giving you that visual representation. Thank you.